Hey guys, Boris Asher, BK Force. Welcome to our BK Weekly Technicals for 08/11 to 15 of 2014. Where are the trades? Well, really interesting week this week, obviously. Lots of volatility. You're looking at the Euro chart. You basically see, I'm just going to zoom in here so you guys can actually see this. See if I can get the zoom. There we go. Zoom in function. You see basically the 3350 kind of really held on the fact that we didn't get any worse as far as risk aversion flows. Overall, Euro remains in a very long downtrend, but we are having clearly a little bit of a dead cat bounce, and to me it really represents an opportunity here to sell the rallies into any kind of strength into 35. So I think 35, which was a very key support level, it kind of held, is going to be at a much tougher level to overcome here unless something incredibly rapidly positive happens in the Eurozone, which is quite the opposite, because I think the Eurozone is going to suffer a long, slow, steady death here because of the problems with Russia. Even if the situation with Russia begins to thaw, the economic damage done in Q3, Q2 is already quite significant. So therefore, I think the trade into the 35 is going to find probably pretty serious resistance here. And is going to offer an opportunity, a pretty decent opportunity to sell for perhaps at very minimum double bottom test here around the 3350s. We'll see if it even climbs back that high. But anywhere where you start to sort of scale up from 3450 into 3500s, you probably have a decent chance. The trade would go completely bust if you cleared and closed above the 36s, because then that would just really, I think, establish a much deeper and bigger base. But for now, I think that's a relatively safe bet as far as a trade going forward on a longer-term basis. Dollar yen, risk aversion trade obviously dominating all the way through last night, but we did bounce off the 100, 150. The longer term, let me just go back to the zoom out area. You can see that the longer term trend, the really key support here is this 175. This one spot 75 has been just absolutely massive support. We obviously failed at 103s off the NFPs, came back down. Now it looks like, again, it's just an incredible grind. Buying bottom, selling tops at this point. A break below 175, though, I do think really creates a very quick and sharp move through the hundreds and possibly 99s at that point. But anywhere until then, you really can't trade the breakouts. You can't even trade the breakouts at the 103s, because the really truly strong breakout will only happen above 104s, which looks considerably far away given the low volatility. I mean, if you think about this, this is really just incredible. We've basically had a 200-point range for the last 5 months. It's just been the most low vol trade in the world. Cable, on the other hand, looks like dead meat. I mean, what's interesting here is that despite the fact that Euro kind of bounced, cable just dies. And I think the irony of all ironies, the trade that everybody thought was just the easy money trade, which was the short Euro pound, is just blowing up in people's faces big time here off the 79 bottom. Now, having said this, though, I think it'll be interesting to see just how far we can climb here above, into the 80s. I do think, I mean, we've made a very decent base, and I think a break above 80.50 would really strangle a lot of the Euro pound shorts. But at the same time, it could be a relatively low risk short here, given the fact that you do have a lot of resistance. So, cable looks just inordinately weak at this point as profit taking kicks in, and basically the market is just completely disappointed in the idea that they're not going to be the first to raise rates. In fact, it looks like they're going to just simply fall in line. And with the UK elections coming up, not do anything until mid-2015, which puts them essentially on par with the Fed. Also, UK data starts to deteriorate a little bit more, and with the Scottish independence vote looming, all of these things kind of present a little bit of a risk to the currency. So therefore, it really remains under much heavier water than anybody anticipated. I think that's one of the more interesting things about this. The 767, though, is definitely very decent support here. So probably, if you're starting to bargain hunt, the bargain hunting area is here. This is the week to kind of see if it makes the, it makes and breaks the hold here. It needs to hold, obviously, the 67s in order to give you a little bit of confidence that it's reached a little bit of a base here. But having come down a significant amount, I mean, basically we've come down, I think, what, 25 days in a row or something, with only 2 or 3 days of a retrace. We're due for a little bit of a rebound. So the key thing I think to watch is next week. Are we going to break down below these lows and close? If we do, then it's still not the time to buy. But if we sort of close above the lows of anywhere around here, or maybe even the lows of Monday, that could give us an opportunity to sort of enter a relatively low risk bargain hunting trade. Aussie dollar. Now Aussie is I've been trading relatively well here into this 92.50s. Interesting thing though, I think, is fundamentally actually things are not horrible but not great. And you're kind of seeing this. I think Aussie might actually, ironically enough, become a very low vol trade for the time being, with 9,200, 9,300 being the new base. 9,200 clearly a very, very strong base for the pair. I don't think it's going to tumble through it unless we get much more serious risk aversion trades. But at the same time, having come out with relatively weak employment data, with RBA continuing to talk it down, and with Chinese data, even though it's positive, was not positive on the export side. On the import side, excuse me, which is what's really important for the Aussie. I think you have a natural 93.50 resist here that's going to remain. If you look at it in the chart here, it's basically a massive, massive top formation from 94s to 95s, and we're at the bottom end of the range here. A break of 92s obviously really opens up a much uglier and deeper correction. But for now, I think we're just treading water here, and it's going to be a very, very chunky trade for the time being. Let's take a look at Kiwi also. Kiwi had obviously a lot of negative flow this week, especially off of the very, very bad. I mean, we had the RBNZ announcement, which kind of flipped everything down, saying they're not gonna raise rates again. And then the dairy numbers came in very, very weak. But we're coming now into the double bottom support here. So here, Kiwi also represents, I think, kind of an interesting support. So one of the trades, by the way, that when I was in Singapore last week, that I thought was decent and kind of proven me right so far, was Aussie Kiwi at 110, short of Aussie Kiwi at around 110 or so. So this kind of area, 109, 110, to me looks like a relatively decent bargain area against which you want to short. Clearly a lot of resist here, and the idea being is that I think it's a positive carry trade with Kiwi not being as bad as the Aussie. There is danger here that I think if we break to 111, then it's clearly wrong. But anywhere below 111, I think the Aussie Kiwi, even if it probes the top side, really would have to work very, very hard to get to 111. You'd have to have some very, very positive flow to the Aussie and some negative flow to the Kiwi, which I don't think is going to happen. So overall, I think there's really still a pretty decent chance here for either a scale-up trade against this trade, or just simply, or about a 150 point stop against this trade to see if we can slowly but surely drift down towards the 108s on that particular move. And then the last thing I wanted to show you, Dollar CAD. Dollar CAD had really bad, ugly data this week with the employment. We're now crawling towards this 110. The 110, though, is a pretty serious resist, and I think you're not going to get much more beyond that. Dollar CAD tends to really not extend its rallies that much, but we could test 110s. And I think if you just sort of have a contrarian streak, you may want to just short this 110 against the 111 stop just to see if there's a little bit of a correction. But overall, I'm not fundamentally or technically in love with this trade, so I'd rather just pass it up. It's a tough trade to really focus on at this point. Overall, though, I think the net takeaway is that Euro seems to have really held this 33.50, trying to do a little bit of a short covering move, but it is very much a short covering move in my opinion. So therefore, it's a sell the rally move into the 34.50s, 3500s eventually for it to flip back down. And the other thing that's kind of interesting is obviously watching the euro pound cross, as everybody was really, really short this thing. And you're getting a little bit of a short squeeze over here that I think could take you through the 80.50s, but then at that point probably going to become another interesting short opportunity as we go forward. Anyways, wishing you guys the best of luck, the best of trading. Next week hopefully next week should be a little bit lighter, but we have never know, we have a lot of geopolitical risk, and that could really flip things around. August tends to be a lot more volatile than people think, so stay alert, have a good time, and I'll see you next week.